welcome to 55 minutes of current and relevant business talk. Where else does it happen but on Business Morning on Channels Television? Good morning, I'm Ini John Mekwa, and I'm glad we'll be doing this together. Let's start off with the market. We'll begin with what's going on in oil market. Oil futures edged slightly higher on Wednesday on hopes for improved Chinese demand, while uncertainty about how a Western cap on Russian oil prices would play out has kept markets on edge after a sharp fall the previous session. Brent futures gained 13 cents to $79.48 a barrel after they fell below $80 for the second time in 2022 during the previous trading session. U.S. crude futures clawed back early losses and were steady from the previous close at $74.25 a barrel. Expectations of rising China demand continued to be a positive driver as the country posted fewer new COVID-19 infections for 2 consecutive days. However, uncertainty on how the price cap on Russia oil would play out on supply contributed to volatility. Russia is considering 3 options, including banning oil sales to some countries and setting maximum discounts at which it will sell its crude to counter the price cap imposed by Western powers. Still talking about oil, but now palm oil. Malaysian palm oil futures rose on Tuesday, rebounding from earlier losses after reports of India's higher palm oil import and Indonesia's preparation for implementing a higher blend of biodiesel, which contains palm oil-based fuel. The benchmark palm oil contract for February delivery on Bursa Malaysia Derivatives Exchange gained 3% to 4,086 ringgit. That's about $930 per ton by the end of the afternoon session, after losing as much as 2.5% earlier in the day. Palm oil imports by India, which is the world's top vegetable oil importer, jumped 29% in November from a month ago. A steep discount to rivals soy oil and sun oil made buying tropical oil lucrative for local refiners. Well, let's leave the oil market and come to Nigeria in the financial space. From the 9th of January 2023, the revised cash withdrawal limits will kick in. This follows the redesigning and subsequent launch of new notes, which should be in circulation in about 8 days. That's from the 15th of December 2022. Well, Will Ibonga put together the details of that circular that was released by the CBN yesterday in this report.
Integrity of a local legal tender.
On October the 26th this year, the governor of the Central Bank of Nigeria, Mr. Godwin Emefiele, in a special press briefing revealed that 2.73 trillion naira out of the 3.23 trillion naira currency in circulation, that's about 85%, was outside the banking system.
An indication.
In a bid to curb the holding of bank notes and take back control of cash in circulation, Mr. Emefiele announced the bank's action to redesign the 200, 500 and 1,000 naira notes, which takes effect mid-December, and gave January 31, 2023 as deadline for the deposit of all old notes outside the banks.
We believe that the redesign of the currency will help deepen our drive to entrench cashless economy, as it will be complemented by increased minting of our e-naira. This will further rein in the currency outside the banking system into the banking system, thereby making monetary policy more efficacious.
The new naira notes were then launched on November 23 by President Muhammadu Buhari. Today, as a follow-up to its currency management and cashless policy drive, the CBN, in a statement, revised cash withdrawal limits for individuals and companies. Going forward, individuals and corporate organizations are allowed to withdraw over the counter a maximum of 100,000 and 500,000 naira per week. Maximum daily withdrawals for ATMs and POS was set at 20,000 naira with a cumulative of 100,000 naira weekly. Also, only denominations of 200 naira and below will be loaded into ATMs. Meanwhile, as an exception for compelling circumstances and legitimate purposes, cash withdrawals above the prescribed limit are allowed, but should not exceed 5 million and 10 million naira for individuals and corporate organizations. However, This would attract processing fees of 5% and 10% and should not exceed once a month.
So there you have it, and it starts on the 9th of January 2023. After, of course, the redesigned notes would have been in circulation from about a week from now. Now we have the Chief Executive Officer of Dairy Hills, Kelvin Emmanuel, to share some insight on the implication of this. I know you've been thinking about it since you heard about it yesterday. How can this affect you? What possible impact can it have on you? We have Kelvin Emmanuel, General from our Abuja studio. Hi, Kelvin. Good morning.
Good morning, Nini. Thank you so much for having me.
Yeah, so once again, we're talking about the CBN. Well, I think we did know that there was going to be some sort of limits, you know, there was going to be some sort of limits when we heard that the central bank is trying to mop up cash in circulation and all of that. But does this sound too harsh? Is this just all right when we see that the central bank had said that about 85% of money in the country is outside the banking vault? So is this good enough to deal with that 85%, or is it too harsh?
Ini, thank you so much for having me. You see, when I look at government policy, I always like to refer back to data, extant laws, you know. The governor of the central bank is raising the reasons why he's going ahead with this policy as going cashless, money laundering, and inflation. And the reason why I don't buy the rationale behind this policy decision is because when you go back to the data, when you go back to the fact that in 2018, President Buhari signed an act that established the NFIU and took the NFIU out of the control of the Economic and Financial Crimes Commission and saddled them with the responsibility of tracking and monitoring suspicious transaction reports, STRs, for financial institutions and non-financial designated institutions and professions, you know. I think that it's a bad idea for you to reduce the velocity of money in circulation by restricting the amounts that can be withdrawn from ATM card to 200 Naira notes, considering that you have the level of inflation you have in Nigeria. What is the reality on the ground? Reality on the ground is that there are 17 ATMs, 147 POS machines, and 4 bank branches per 100,000 Nigerians. We have an internet penetration rate of 38.7%, right? You have an unbanked population of 55.5%. This is the reality on the ground. How do people who do transactions, both the people who are in the markets and the people who transact with the people in the markets, in different markets in Nigeria, Sabon Tashan market, Dawano market, Tudu Wada market, Gweru market in Adamawa, Arara market in Aba. These are markets that transact billions of naira. Alaba market, Alaba International in Lagos, billions of naira in cash transactions on a daily basis. How do you reconcile the reality they have on the ground with the fact that even the mobile transaction has a limit of 100,000 naira and the banks always have downtimes? So, you know, when there are policy decisions rolled out like this with a very short window, it's my view that the Central Bank of Nigeria has not fully thought through the implications and the realities on the ground, considering that the infrastructure available on the ground does not support the policy that has been made.
But don't you think, I mean, the world is going digital. There are options. There's obviously the e-naira. I'm sure the central bank would like to use this opportunity. And the risks attached to the cash transactions, perhaps the central bank is trying to use this opportunity, apart from dealing with the issue of corruption and the electioneering, cash involved in elections. Perhaps the central bank is using this time to create a new platform for the country to say, let's go digital, guys, and it will even reduce the cost of printing.
For you to go digital, you have to provide the infrastructure to go digital. Just last week, a news report was released that the Nigerian Governors Forum has finally agreed that the right-of-way charges for telecom lines be slashed by 90% from 145 naira per kilometer to to 14.5 naira per kilometer. Good development. But what is the reality on the ground? I'll tell you what, there are about 42,000 base stations, base transceiver stations in Nigeria, BTS, that take signals for all the major telcos in Nigeria. Lagos has the highest concentration. Lagos has about 15% of it at about close to 6,000, if I'm not mistaken. Yobe as a state, now Lagos is a state with 30,577 kilometers in terms of size. Yobe as a state has less than 400 base transceiver stations. So when you consider the fact that Lagos has more BTS per square kilometer and people resident compared to states in the northwest, states in the northeast, and you consider the fact that there are states in Nigeria that actually do not have access to telephone signal, how do you implement digital and electronic banking transactions? I'll give you another pointer. A report was released that says 63% of Nigerians are in multidimensional poverty. The implication of that is their per capita income is less than $2,100 per year, which means they earn in cumulatively total less than $1 million per year. You have Nigerians struggling to pay for food, to buy bread, to buy rice, to buy chicken, to buy oil, to buy cooking gas. Yeah, the price of 12 kg of cooking gas is in some areas 12,000 naira. Yeah, so when it comes to it, will the average person who is earning less than $1 million naira cumulatively a year choose to buy internet data for their phone? That's if they have a smartphone. Now, if they have a smartphone, because smartphones have become expensive because of the exchange rates, over food, over school fees. These are the issues, the fundamental issues on the ground that is not being considered in rolling out a policy direction and saying that in about 1 month you're going to restrict people from withdrawing more than 100,000 naira per week and come up with all kinds of very harsh conditions on which they'll have to go through if they choose to withdraw more than that on a weekly basis.
Well, we hear you, Kelvin Emmanuel, asking for infrastructure and that, I mean, there should be a pathway to it, to a policy, especially if we want the policy to be implemented and impactful as expected. But this is a new conversation we're just starting. We have to thank you so much for joining us, Kelvin Emmanuel, Chief Executive Officer of Dairy Hills. Always passionate when it comes to CBN. We'll talk to you very soon. I'm almost sure of that.
Thank you so much for having me.
All right, certainly we'll follow up on this conversation and get other reactions to this currency management policy that the CBN has introduced starting on the 9th of January 2023. So we still have some time to talk about that. Let's switch gears now and talk about another issue which affects, of course, the economy. That's why we're discussing it on Business Morning. In August 2021, the Nigerian Institute of Quantity Surveyors disclosed that there are over 56,000 abandoned projects in all sectors across the country, estimated to cost about 12 trillion naira. So if we're looking for money, that's where one of our money is. For instance, the oil and gas sector abandoned project cost 72.3 trillion naira. Well, reports by Project Management Institute called the Pulse of the Profession 2023 has identified a new skill set that is supposed to help deal with this based on findings from 3,500 project program and portfolio managers. Let's hear about this skill and see the reality, how it can be implemented, if it can help us mop up some of this trillions of naira. With George Asamani, he's the Managing Director for PMI Sub-Saharan Africa region. He joins us from the United Kingdom. Hi, George. Good morning. Thank you for your time this morning. We know you're 1 hour behind in the UK at this time. So tell us, George, just to start with, we hear Nigeria is losing trillions of naira. Issue of abandoned projects, obviously, is not new. It's we've cried and talked about it, but what really is it costing the country?
Morning to you and morning to your viewers. Thanks for having me. Hi everyone. As you mentioned, I'm George Asmani, Managing Director for PMI in Sub-Saharan Africa. I heard the data just as you have heard it. According to the Nigerian Institute of Quantity Surveyors, we are seeing 12 trillion Nigerian naira being lost through essentially bad project management or abandoned projects. And, this is obviously a critical issue, not just for the projects themselves, but for the economy as a whole. Because when you combine all the project failures, it has an absolutely negative impact on the economy. In terms of why these things are happening, we as the Institute, we've been around for over 50 years with the organization behind the profession. And so over the years, we've done a lot of research from, the most complex projects to the most simple all around the world. And there's some common themes. And specifically in the last 12 months, these themes have come to the surface. Because as you mentioned, every year we have this research report called the Pulse of the Profession. And really what has risen to the surface is what we call power skills. Now, this is not new, but I think what's new is that there's more of an emphasis on power skills. And the power skills, the easiest way to describe it are the soft skills, the most important soft skills or the most important full skills that help you to get things done. So once you've done all the technical side of things, once you've created the technical solution, the journey that you're supposed to make, you need people to walk that journey. And this is where your people skills or your power skills come into play. And we're seeing that there really needs to be a lot more work done on the power skills side. So these are skills like communication, problem solving, leadership, negotiation, and these account for a huge part of abandoned projects and even failed projects.
Well, George, a lot of people would say when we talk about abandoned projects in Nigeria, it's more connected to the issue of corruption and lack of transparency in the process of awarding the contracts or the projects and following through, and not, the skills you're talking about.
Well, when you talk about what you just mentioned, these are scenarios that are dealt with by people. It's people who are in those scenarios. So if we talk about people skills, you can talk about ethics. You can talk about negotiation. These are all people related skills, which is actually exactly the point that's being made. Yes, the technical skills are important, and so as obviously you're developing your projects, you have to think about that. But in some of the more challenging social issues, when we have stronger power skills, we're able to address them as well head on.
So how do we get these skills out there to deal with this already abandoned projects that's costing the country so much?
I mean, that's the responsibility of many of us, but especially PMI, Project Management Institute. We don't only provide the technical side of the solution. When you train as a project manager or as a leader who is responsible for projects, what we advocate for is essentially our learning and development framework, which is called the talent triangle. And all that is saying is really there are three sides to your capability. There's the technical side, the second side is the power skills, and then the third side is your business acumen. So the technical side is obvious. You've got to have the technical know-how. Power skills I've just talked about. They're the critical non-technical skills and the people skills that help you to get the job done. But the third side, which is the business acumen, is understanding the business context, which means why are we doing this project? And so in all the support, in all the training, in all the certification that PMI provides, we're not simply saying this is the technical side. We're talking about all that side because projects are delivered in context. Projects have a human impact. projects have an economic and business impact. So what I'm saying is it's the responsibility of everybody, but more importantly, PMI as the global body behind the profession of project management to help countries, to help companies to become upskilled so that we're addressing these key issues.
Yeah, well, I do hope that this power skills would be embraced. So, because sometimes it's not just about even getting trained, it's about taking the training to the job and
Exactly.
practicing it. All right, George. George, we really have to stop here. We do have a paid segment coming up. George Asamani, Managing Director of PMI's Sub-Saharan Africa. Thank you so much for your time. All right, so AFEX is next, but that's after this break. So it's AFEX time. You're welcome to this time, which is for AFEX for the week ended the 5th of December 2022. Total turnover in value on the AFEX summary commodity exchange was 6.2 billion naira. That indicates a positive change of over 50% for that week ended. We have David Ukomadu, strategy and corporate finance analyst with AFEX, joining us from our Abuja studio to give us details of trading for the week ended. Hi, David. Good morning. So what are the details?
Good morning, Nini. Thank you for having me. So over the course of the trading week, we saw an increase in total turnover, as you rightfully said, by 50.13%, moving from just 4.12 billion to close the trading week at 6.2 billion naira. While the total volumes traded saw an increase also of about 41.28%, moving from 13 million contracts to close the week at 19 million contracts. The number of deals saw a decline of about 14.81%, moving from 278 deals to close the week at just over 222 deals. The ACI, which is the AFEX Commodities Index, saw an increase of about 1.42%, moving from 455.71 basis points to close the trading week at 462 basis points. While the AFEX Export Index, which is the AEI, saw an increase of about 1.73%, moving from 216.52 basis points to close the trading week at 255.87 basis points. Moving on to the volume of contracts traded on the exchange over the week, we saw an increase in the volumes for maize, moving from 5,118,805 contracts to close the week at 7,651,744 contracts. While paddy rice saw an increase, moving from 4,147,404 contracts to close the week at 7,977,419 contracts. Cocoa saw an increase also, moving from 4,577 contracts to close the week at 533,989 contracts. Sorghum saw an increase of about 20,778 contracts, close the week at 22,278 contracts. Moving on to price changes for the week, we saw an increase in the price of maize of about 12.82%, representing 28.41 naira, to close the week at 250.02 naira, while paddy rice saw an increase of about 19.04%, representing 6.54 naira, to close the week at 311.73 naira. Cocoa also saw an increase, a marginal increase of about 0.41%, representing 6.72 naira, to close the trading week at 1,642.59 naira, while soybean and cashew experienced a decline. All other commodities on the exchange remained unchanged. For more information on the commodities market, you can always check out our website at Africa Exchange and our social media handle at COMEX by AFEX.
All right, David, thank you so much for giving us the details of trading for the week ended. Now, let's move over to and talk about the quality of agricultural products in Nigeria. A lot of groups have termed it poor, and that's because of poor handling of agricultural products pre- and post-harvest period. We have issues like diseases and pests attacking crops, excessive use of pesticide, preservation purposes, and many losses occur before, even during harvesting operations. Too early harvesting causes problem and too late also has caused a lot of losses. And we know at this time in the world, the quality of consumption of consumables cannot be joked with. Well, we have to speak to this. Ajay Abdul Kadir, the supply chain manager with AFEX, also joining us from our Abuja studio. Hi, Ajay, good morning.
Thank you for having me. Good morning.
Good to have you. So what are some of the dangers of improper harvesting operations in the country?
Yeah, thank you. So one of the dangers of improper harvesting is that what we end up seeing is that when you harvest when you harvest as at the time when the harvest is not supposed to be done, quite a couple of things would happen. I would use maize as an example here. When you look at mix, for example, when you harvest it when the moisture content is still very high, it means that and you plan to store it immediately. It means that at that point, that maize would still have, I mean, the moisture content of that maize will still be very high. And for the reason being that it is being high, it's going to cause a lot of problems for the farmer, because when the moisture content of your maize is high, it means that you cannot be able to sell it, at the international market, or you hardly be able to sell such kind of maize. And another thing is that revenue is being lost at this point when you harvest too early because of the damage that has been done on such kind of maize, maybe because of the increase in the aflatoxin in that maize. And you and I know that the presence of aflatoxin on maize is not fit for human consumption, not to talk of animals. So if you cannot, feed it on animals and human being cannot feed on it, and then it means that it's as useless as nothing. The other danger is that when you harvest too early, it means that you're going to be, losing a part of those commodities. And you can imagine if you have maybe 20,000 farmers harvesting their commodities too early. For example, on an hectare of land, you're supposed to have about maybe 25 bags. And when you harvest too early and you store, at the end of the day, the number of bags that will be good, maybe in the next 2 months, maybe most likely will be dropped to maybe like 15. And at that point, when you go to the market to go and source for this commodity, but because you have a large number of these bags that has gone so bad, it means that the price of commodity will go very high.
So, I mean, there's no doubt there are emphasis on the quality of agricultural products for health reasons and even revenue, as you mentioned. But what should we do? What are some of the procedures that should be put in place for Nigeria to attain a high quality agricultural produce?
Okay, so for me, one of the first things that we need to do is to ensure that these farmers get quality inputs and get everything that they need at the planting season. The other thing is that these farmers also need to be trained and retrained, and not just training them alone. You need to monitor them. So it's not enough for you to just, give them this quality input. If they are not trained on how to, handle them properly and how to apply them properly, at the end of the day, it's still going to be a waste. So one of the things we have, we did in AFEX is that we ensured that even after providing these quality inputs to this farmer, we ensure that we follow up with them. Across the Federation, we have about 600 extension field officers that go into these farms. At least they visit each of the farms at least once in a week to ensure that these commodities that have been planted are doing very fine. So at the end of the day, you will notice that these commodities will come out very fine. Another thing that needs to be done is that we ensure that we invest so much in storage capacity, because it's not good enough that even when you have these commodities coming out very good, if you are not able to store them properly and apply the best agronomic practices on this maize, it's still going to be a waste at the end of the day. So for us in AFEX, we believe that if we are able to, get a lot of warehouses close to these farmers and they are able to store their commodities, as against them storing them in their houses and, exposing them to rodents and all other kind of, pests and, making them not get value for their products. So if we're able to, handle this commodity very well, it's such that we provide the necessary infrastructure that helps to be able to keep all of these commodities that are being produced I'm sure that we'll be able to, compete with the international markets if these commodities are, well
Yeah,
kept
well, Aja,
and
you talked
handled.
about storage there. We've talked about storage on different fronts here in Nigeria, storage and preservation. And a lot of times it comes back to funding. So how can the system be improved? I'm talking about the storage system in the country, at least on an average.
Yeah, so if you look at the indices, this morning I was just going through one of the dailies, I think sometimes in 2020s, and it says that the federal government has about 33 silos around the country. You know that the best form of storage for grains, especially maize, is in the silo. Not much of these silos have been put in use, and getting to construct silo costs so much at the moment. So I would say that for FX we have tried our best, and we are still trying our best. At the moment, we have about 150 locations in Nigeria where we have all of our warehouses. And if you put this number together, it will sum up to about 600,000 metric ton 600,000 metric ton capacity altogether. And part of our projection is that we want to be able to have storage capacity up until 1 million tons. And we are not going to stop at that until we are able to achieve this. And once we achieve this, we will do more as well.
The effect seeing, when we talk about the structure, agricultural production for 2023, what's your forecast?
The forecast is not really looking very good, and I'll give you reasons why I said so. The season we just finished now, if you look at the statistics, we had about 12 million tons of maize being produced the season we just finished, and that's because as at the beginning of the year, the prices of fertilizers were very low. They were as low as 12,000 naira per bag. But if you look at what is happening today, the prices of fertilizer had gone up more than 100%, up to 120%. So a bag of fertilizer, as I speak to you today, ranging from 24,000 naira to 25,000 naira. So the question is, how many farmers can afford to be able to, buy these fertilizers and apply this into their farms? And if you don't apply fertilizers into your farms, of course, I doubt if you're going to have a very good yield. So for us, we are looking at a decline coming in the coming year, 2023, that because these farmers do not may not be able to afford this fertilizer. But at FX, we are trying to see how we can lock in price with some of these input provider even within the year before it gets to next year, because there's still every likelihood that by next year, the prices of the commodity of fertilizer will still go higher than this. But as FX, it has always been in our plans to prepare early so as to mitigate against some of these risks that might likely happen in the subsequent year. And we will not stop at continue to helping this farmer. We will not stop to continue to helping Africa and helping Nigeria itself. So because part of our one of our motto is to help Africa feed itself and to also help Nigeria feed itself.
All right, Saja. Well, we can also pray that the war going on in Ukraine between Russia and Ukraine stops, because that will obviously affect the price of fertilizer and might also be some good news for us. But thank you so much. Thank you for sharing with us what you're doing at AFEX. Saja Abdulkadir is the supply chain manager at AFEX.
Thank you. Thank you for having me.
We move on to another market now, and Anete Edet is going to drive that car. Hi, Anete. Good morning.
Yeah, good morning, Ini. Welcome back from your vacation.
Yeah, that's the first time you're seeing me. Thank you so much. Yes. I think I've gotten back into the flow.
Exactly.
Almost forgetting I went on vacation.
Well, it's good to go on vacation. I think I would prefer my vacation at this time, but unfortunately for our industry...
Not for you.
At all, at all. Yeah. Okay, so now I'll
be
giving the
market is not on vacation, though.
The market is never on vacation. Yeah, the market goes on vacation when all the rest are also going on vacation. But
when
at this moment,
investors go to spend the money they've made for the year.
Spend their money, yeah. The market is all about making money.
Yes.
And also sometimes sharing the losses. But we're here to make the gains.
All right.
And speaking about gains, this is what for Tuesday's trading session, we were still in the green, still raising up the all-share index, which has climbed straight up into the 48,000 level and still going up by another almost a 0.25% increase, 0.20%. That's what it printed at the close of Tuesday's trading session. Then in valuation terms, in Naira terms, what we had is more than 52 billion Naira added to this amount of the market's total value. That's the total value of all the stocks listed on the Nigerian Exchange Limited as at the close of Tuesday's trading session. Now, this gain that you see here, it came amidst a positive market breadth. But this market breadth, it was the losers were dominated mostly by the big banks, as well as the likes of Geregu and Owando, which could have made the market to go in the red, but thanks to the likes of Lafarge and Bua Cement, they lifted the market by this margin. Now, let's take a look at the bigger picture on the sectoral performance. This is what it turned out for that market. As you can see, the banking counter was barely in the positive territory, 0.03% increase, while across the other sectors of the NGX, there's a green picture. But here, what you see, the 0.38% decline, that came largely on the back of Owando, which fell at the close of Tuesday's trading session. Now, let's take a look at the volume, what you call the activity chart of the market. In terms of the volume of shares traded, in contrast to Monday, it declined by 71.37%. This is what you have, over 184 million units. Value was also in the red. It was down by 14.69%, while in terms of the deals was down by 8.35%. Year to date, in terms of year to date, we're still in the positive territory. Year to date, we're at 13.23%. Month to date, we're still in the positive 1.5%. That shows you that this market has defied what are some of the projections that there will be some profit taking, or the impact of profit taking will hit the market. But now let's get a bigger picture about the market, and we will be having Seun Arambada, a research analyst at FBN Quest, to give us more information about the market for Tuesday and what to expect for Wednesday's midweek trading session. Thank you for joining us, Seun Arambada.
Thank you for having me, Victor. Good morning.
Yeah. So now, our market, I think my own prediction was that this market was going to go below the 40,000 level, but it has defied my own projection as a financial market journalist. But for you, the traders, did you expect this market to continue in that 48,000, 47,000 level into 48? And then what's driving this sentiment? Because we're in the fourth quarter. The results will be out next year. So give us more information about this market as we speak.
All right. So, I mean, you rightly said it. I mean, many projected that the year, will be characterized by bearish sentiment, as is typical of pre-election years, right? But I remember also saying at the beginning of the year that this year is quite unique, and my view was coming from the fact that when you look at the constituent of foreign investors that play in the market currently, as opposed to previous years, that dynamic has changed. And then usually in pre-election years, you will see, capital flights, because investors are wary of, what could become of the macroeconomic environment, and all of that uncertainty. But I mean, this year is quite unique. But having said that, I mean, this year also has had its fair share of bearish sentiment. I mean, for the most part of the second half, we've seen the market, decline, and only for it to pick up, towards the tail end of the year, Q4, which is not so surprising. I mean, if you look at the trend, we can't say that there's anything inspiring from the macro backdrop so far. For the most part of second half, the macro backdrop has not been really inspiring. We've not really had any surprises. But as a closer look, you see that investors are reacting to corporate actions, and then stocks are relatively cheap. If you look at it broadly, the Nigerian market is trading at a PE multiple of about 7 times, and then when you compare that to about 9 times of the frontier market, I mean, this is a discount, and could present some bargain hunting opportunities. But that, I mean, we can take a cue from what we saw in 2020, with the Dangote Cement share buyback, and I think same is also repeating itself. You'll see the activity level on Dangote Cement. Going forward, I think that cyclical sectors, would will reflect what is going on in the macroeconomic activity, with the macroeconomy. But for banks, I think that the elevated interest environment is still a net positive for banks, and we can expect improvements in funding income and PAT for banks.
Okay, thank you so much, Shion, for that analysis. And of course, as usual, our catchphrase: we will keep our eyes on the market. That was Shion Arambada, research analyst at FBN Quest Merchant Bank. Now let's move over to the fixed income market. The fixed income market. We have it at the fixed income market, the bonds segments of that market, it was in the bullish side, although he did trade with mixed sentiment. But over that market space, the average yield, it's edged higher by 1 basis point to about 14.3%. But when you take a look at the board here, the 18th of April 2037 paper had the highest number of attraction there. There you can see on the board there, total number of deals carried out on that market segment was 6. And then cumulative, what you have, the number of deals was 10. Now, also for that market, we had much demand for the April 2023 paper, and which expanded at the mid segment. It expanded by 7 basis points due to sell pressure by some participants. Now, let's move over to the Treasury bills market. For the Treasury bills market, it was quiet. There's going to be a primary market auction by the Central Bank of Nigeria today. So participants there are a little bit cautious about the auction by the Central Bank of Nigeria for that primary market auction. Now, moving over to the OMO market. For the OMO market, average yield there was unchanged at 10.1% for the OMO market. Now, so that's for that market. So we will be looking out for how the impact of the primary market auction by the Central Bank of Nigeria turns out for the fixed income market, and maybe it's going to have a spillover into the equities market for midweek trading session.
We're certainly looking forward to that. I mean, the analyst I spoke to yesterday, Senator, did say that he thinks it's going to come out positive, but we'll keep our eyes on the market and our fingers crossed. And tomorrow, I'm sure you'll bring us the details of it.
Definitely.
Thank you so much, Aniti. All right, let's go to London now. And Juliana, I have missed Juliana, speaking to her, that is. Juliana, good morning. Good to speak to you, finally. And but not very good.
Good morning, Innie. Welcome back.
Thank you so much. Not very good, Juliana, because we're still talking about this cost of living crisis, and we're still seeing the cost or price of houses going up, and mortgage British people are feeling the pinch.
That's absolutely right. I can hear both you and Aniette, and we can double up. But you're right, you were away for a while, Innie, but unfortunately the cost of living crisis has gone nowhere, and it's actually impacting the housing market. If you cast your minds back, it's actually been a couple of years now since we first got out of the summer lockdown in 2020. The housing sector was one of the first sectors to reopen, and we saw house price inflation surge. It was so expensive for people to buy properties. That's all changed now. We have had data released by the UK's largest mortgage lender, Halifax, this morning, and it's shown the first dip, or the biggest dip, in housing prices month on month since 2018, and it was a 4.2% dip. The average cost of a property in the UK now is over £252,000. That is still a lot of money, and according to my phone calculations, I think that's over 158 million naira. It's a lot of money. Not everybody in the UK can afford it, but it is showing that house prices in the UK are subsequently falling. There are a series of factors. One is the one I just spoke about. We were all waiting for the burst. It does appear that it's coming, but of course there are other issues, one of them being the trajectory of mortgage rates. They've been rising extensively. Innie, I just want to confirm that you can still hear me.
Yes,
and
I
I'm
can
not
hear
just
you, Juliana.
ranting to myself.
Loud and clear.
You can still hear me. Okay, fantastic. So there has been the trajectory of mortgage rates, and also disposable income. It is the cost of living crisis. People are really struggling at the moment, and a lot of people are putting off purchasing their first home so that they can ensure that they can rent where they still are and put food on their table and heat their homes.
Yeah, thank you so much, Juliana. And as you said, I was away, but the cost of living went nowhere, and so did the strikes. But I guess maybe Ladi would take that up because we hear strike might spill over to December. I mean, to Christmas. Not very good one, but Ladi will squeeze that into Business Incorporated at 1:30.
Thank you.
All right, and talking about Ladi, he walks into the scene now with his crypto numbers, which I don't know if they're looking any better. Ladi made me feel good on Monday when I resumed, telling me that I have some kind of magic wand that would just move Bitcoin back to at least 20,000.
Yeah.
But as we speak,
it looks like the bulls are on strike. You know, it's
what has happened to my magic?
We'll still be watching out for that magic because there's still that talk about some kind of Santa rally coming up, you know, at some point.
All right. Okay.
We'll be looking out for that.
I'll be hopeful.
But right now, it's still fear in this market. There 29 points. That's talking about the sentiment in the total crypto space right now, 29 points, 100. Quite an improvement for what we had, you know, yesterday. Might be inching towards greed, you know, at some point. We'll keep watching how that progresses. Let's look at the market cap today. We see it's $851.26 billion. That's the market cap for the total crypto space, Bitcoin and the altcoins. That's down 0.30%. We look at the volume traded in the total crypto space. If I can get that right there, $35.52 billion. That's down 5.37%. Bitcoin dominance sitting at 38.35%. We look at the price of Bitcoin this morning, $16,962. That's at 8 a.m. this morning. Lost that $17,000 level, and there we have it now, the market cap. We see price of Bitcoin now. We see it's lost that 17K level, $16,962, down 0.28%, and we see volume traded. Going to see quite an impressive volume we're seeing this morning, $19.65 billion for the volume traded in Bitcoin. Look at the price of Ethereum now. That's 1,251. We see the 1,000 level holding strong, irrespective of what's happening in the market. Down 0.75% this morning. Volume low, $5.23 billion. That's volume traded in Ethereum this morning. Let's bring in Rume Ofi now, digital market analyst, to bring us up to speed on what's happening. Hello, Rume.
Hello, Ladi. Hello,
wow.
Ladi.
Well, someone is excited in this market. Thank God, Rume. Great to have you, Rume. So I got that news. Even though we're having a lot of issues right now with some stable coins, the pegging, we got that information that Theta has launched offshore Chinese yuan on the Tron blockchain. Tell us more about this.
So, Ladi, I'm going to be very selfish in some of this conversation now because I mean well for my country. I don't have any other country anywhere. I only have Nigeria. So with the fact that China is doing this, I would love a situation whereby we also do ours. For example, China has been able to lead when it comes to CBDCs, which we also are leading in this part of the world. So I would like a situation whereby we also go in their route in certain things. So for example, like this stablecoin, China is Theta is actually partnering with another company over there to come up with a stable coin, and this stable coin is going to be pegged 1:1 to the Chinese yuan, which makes a lot of sense because the Chinese government is protecting its currency, which I think every I believe this is the goal of the central bank, to protect our currency so that our currency could have some strength to be able to match the other big currencies over there. So this is a very good stuff to be done by the Theta, which is the stable coin.
Rume, if I may, is the Chinese government in support of this launch?
So this is it. This is it. I don't have any information specifically that says the Chinese government is the one backing, but the truth is the fact that they have a currency which is stronger now, and you can see from the oil perspective, some countries are already thinking, some of these big countries are already thinking of settlements with the Chinese yuan. So it's only logically correct that if your country's currency is being pegged to a certain stable coin as against the US dollar, which is not It's not their indigenous currency. It is a welcome development. So you using stablecoin pegged to the yuan favors the yuan and the economy of China than the US, which we were very familiar with, petrodollar and all of those things. So now the fact that some people are taking settlements in the Chinese yuan makes a lot of sense for a currency, a stable coin to be pegged to that, so that if there's an alternative, it goes back to them. So that's also where I'm looking at it from, and also looking at the situation whereby we can also have our stable coin pegged to the naira, right? Even though we have the e-naira, the Chinese have a digital yuan, which is also working there. So it's a win-win for them. So countries now are looking towards getting their own things work for them in terms of this digital payment, and I think it's a welcome development.
Okay, so is it still going to be the same thing as having the, the e-yuan and the one that's now pegged, on the blockchain? They're both blockchain currencies, I believe.
Yeah. So the stable coin is owned by a particular company. For example, Tether. We also have USDC, which is by Circle. So they are saying they are pegging their stable coin 1:1 to the UN. It's quite different from the e-naira. So if we're having a stable coin, so one is controlled by government, it's more domiciled in government transactions. Then the other is a private entity, making sure that they have some of these futures, right? Pegging it to the particular currency, which means they are protecting the interest of that country, considering the fact that a lot of people in this space will want to use a stable coin, right? Those inclined in the digital space will like to use a stable coin to do transactions rather than using an e-naira or a digital yuan, for example. So it gives them an alternative rather than if you're saying that, oh, this is controlled by government or this is private, but it still relates to having to do with our currency getting stronger, makes a lot of sense.
Okay. All right. Still early days for the central bank digital currencies. We'll watch how, adoption grows going forward. Thank you so much, Remy Ofi, digital market analyst. And that's it, for the markets. And Ini, I'm sure, I don't know if you have e-naira yet.
Yeah, well, maybe, even if you did not have, with this limit on withdrawals,
Maybe we jump to the e-naira.
Yes, find a way to spend
unlimited
exactly. So maybe that's one way, and maybe that's one way the CBN is trying to push transactions and adoption, of the e-naira. But thank you so much, Ladi. Remember to talk to Juliana on the strikes on Business Incorporated, 1:30. All right, so that's it on the program. Thank you so much for being a part of this 55 minutes of great, current and relevant business talks. And yes, we will continue tomorrow. And yes, we will still talk about the limit placed by the CBN. So you can join us tomorrow at 10 a.m. for more on that conversation. But at 10 p.m. during our flagship here on Channels Television, I'll be bringing you the stock market report. So you can be sure to see how the market closed at 10 p.m. But until then, do have a profitable business day. Make the most of today and cross all the hurdles and make more money. I'm Ini John Mekwa. Enjoy the rest of it.